in general, it really depends on the scale and the speed with which the Chinese central bank is reducing its holding of U.S. Treasuries. The whole reason that U.S. dollar and U.S. Treasuries were used as the reserve asset, and U.S. dollar is this, it's the reserve currency, is because the U.S. Treasury securities are very liquid, right? So you can buy a large amount and sell a large position without affecting market prices much. And there's always people who, institutions who buy and institutions who sell, and there's always very liquid market. So in general, it's not a problem. But if the trend keeps on going, and people may read from this and says, okay, now, does that mean China is going to offload its Treasury securities in the future, right? Moving from maybe a foreign exchange reserve standing at a level of, let's say, $3.7 trillion to something like $3 trillion. So then we would give up $700 billion, right? And that might be a large amount, right? And that may have some impact on the Treasury securities yields. And then as the Chinese sell more Treasury securities, and so it might actually cause the Treasury securities yield to go up. And so that becomes, since that was the Treasury securities yield is the market interest rate in the U.S., the risk-free interest rate, and there might be a tightening in the U.S. market. But in general, I think the Fed has more influence on the interest rate and than any central bank, because it's the U.S. dollar, it's not a Chinese yuan.